Uh-oh, I think Brandon made some mistakes. Hey guys, my name's Bradley. This is Bradley Talks Money. Today we saw Brandon Beavis come out with a new video on Wealthsimple Plus. Throughout that video, he broke down the value proposition and whether or not it might be right for you. I wanted to make this video today because, personally, I think he got some things wrong. There's certain things that he overlooked, and maybe he didn't give Wealthsimple Plus the proper credit that is due. Before we get started, I want to highlight that Wealthsimple Plus is a subscription that gives you access to a US dollar account, no FX exchange fees on your currency when you're buying and selling, as well as an increased instant deposit amount. That instant deposit amount wasn't ever even highlighted on Brandon's video. Some people find that valuable, so paying that a little bit extra each month might be worth it just for that. These US fund accounts can be held in a tax-free savings account, an RRSP, or in your personal trading account. Wealthsimple does offer the option to direct deposit from a US bank account into your personal trade account, but they don't offer that same service directly into a tax-free savings account or into the RRSP. So if you have US funds and you are trading just in a personal account, this might be worth it just on that basis alone. In Brandon's video, he went over an example. To summarize, if you have just a basic Wealthsimple account and you want to buy a company like Google, you'd have to pay a 1.5% conversion fee when you purchase the stock, and then you'll also have to pay a 1.5% fee when you sell the stock. With Plus, you're paying 1.5% fee when you transfer money from Canadian into US, and then you don't pay a fee when you use that US fund to purchase a US stock. The same is for selling. When you sell the stock, you don't get charged the fee, but when you withdraw the funds, you have to pay the 1.5% fee. That's all well and good. That's correct. I agree with him on that because that's the way it works. But something I didn't like about his explanation was that he summarized that as a total percentage fee of 3%. 1.5 on the purchase, 1.5 on the sale, 3%. Makes sense. But it doesn't, and I'm going to explain why. In his example, he used a $10,000 investment where he purchased and sold shares of Google, but the issue is, for a long-term investor, it didn't make sense to me that he purchased and sold at the same dollar amount. Doesn't seem like a long-term investment for me. The reality of the situation is you're not likely to buy and sell the same stock for the same dollar amount, because if you were, there'd be no point in paying the fees in the first place. Let's make this a little bit more realistic. Let's take our $10,000 investment and let's assume maybe that grows to $15,000. You eventually get a 50% return. That seems like a long-term investment, and it seems like something that's possible with a company like Google. Now, it's important to identify that if we buy this stock and we're going to hold it, the dollar amount that we sell it for is going to have a different dollar amount of fees if we're paying that 1.5%. The fees that you're paying is actually $225. Hang with me. We've got $150 as a fee when we purchased a $10,000 investment and a $225 fee when we sell the investment. Add that together, you've got $375. Now, $375 is actually 2.5% of our $15,000 investment, meaning that the longer you hold a stock, the more growth that you experience with your investments, proportionately, the fees for the total investment go down. Another thing that Brandon mentioned in his video was an alternative option for investing in US companies in the form of CDRs, or Canadian Depository Receipts. I've already done a video on that, so I'm not going to go into too much details, but you can check that out right here. The next thing that Brandon mentioned that I want to highlight is Wealthsimple Plus might be more valuable for a frequent trader, someone who's moving in and out of stocks pretty often. I don't personally prescribe to that investing strategy. I also don't think that excludes long-term investors. Investing isn't black and white. Sometimes when we purchase a stock, things change. Maybe the story or the reason why you originally invested in the company isn't the same anymore. Maybe you find somewhere else that you feel you can get a better return, or maybe you made a mistake in the first place. A good example with Google is maybe Microsoft. Maybe you thought Google was on top of the world, they were the best company out there, but then Microsoft comes along with ChatGPT and kind of shakes up everything in Google's atmosphere. Maybe, as an investor of Google, that makes you change your thesis on the company. if you have the Plus subscription and you want to sell Google in our example, but then maybe I want to go buy Apple, I don't have to pay all the fees along the way. I can just do a sell and purchase without paying any exchange fees. That, to me, having that flexibility and not having that 1.5% fee looming over me with my investing decisions, helps me feel like I'm in control and I can make smarter decisions because I don't need to hold a stock when I'm not comfortable holding it at the fear of having to pay a fee. Now, I want to break down the value proposition that I see mathematically with Wealthsimple Plus. If at any point over the course of a year, you are selling a US stock and then repurchasing another US company with at least $4,000, then the Wealthsimple Plus subscription has paid for itself. Let me explain why. 1.5% of $4,000 is $60. If we didn't have the Plus subscription, we'd have to pay that $60 on the sale of the original US stock, and then we'd have to pay another $60 on the repurchase of this new US company. $120 total, that's the entire year's worth of Wealthsimple Plus. In my mind, I look at it as, is there the potential in the next year that I might need to move $4,000? For me, that's yes. Now, an example for why that might be is my cash account. Personally, I don't like holding cash in cash. I hold it in a high interest stock, if you will, which is essentially a high interest savings account that pays out a little bit more than a 4% yield over the course of the year. It's very liquid, so I can move in and out of it as I see fit. That means that if I'm sitting in cash, my cash is still earning me dividends as we sit there. The value in this is huge for me because if I didn't have the Plus subscription, as soon as I move money into and out of that cash position, I'd be paying fees. The next thing that Brandon talked about that I think is incredibly important, especially for Canadian investors, is dividends. We see it all the time. Dividend stocks are hugely popular in Canadian investing circles. As Brandon highlighted, if you have a basic Wealthsimple account and you buy a US company, Wealthsimple won't actually charge you a 1.5 conversion fee when that dividend's received. Now, the issue I have with that is that most of us acknowledge that the best tool that we have in investing, if we want to grow our wealth, is compound interest. And how do we do that, especially with dividends, is by reinvesting. So if I'm receiving dividends from a US company and they're going back to Canadian, say I eventually want to reinvest that, well, I'm going to be hit with that 1.5% conversion fee when I reinvest my dividends. Alternatively, if we have the Plus subscription, I'll receive those dividends, they'll stay in my US account, and I can reinvest those as I see fit whenever I want. There's a lot of value in not having to pay those fees each time I want to reinvest. Now, in my opinion, if you haven't already guessed, the Wealthsimple Plus subscription is more than worth it. If you plan on investing in US companies over the long term, and you plan on having a larger and larger amount that you're investing with, I see no reason not to have the Plus subscription. It gives you the peace of mind and the flexibility of making decisions with your investing without fees looming over your head. I don't mean for this video to be an attack on Brandon in any way. I have a lot of respect for the guy. I wanted to express my opinion on the matter because I think that there's a lot of value in hearing a different side of the story. At the end of the day, you need to make your own decisions with your investing, and you need to do what's right for you. If you haven't already, please consider hitting subscribe. It would mean a lot to me. I appreciate everyone who's come along for the ride so far. If you have any additional questions about Wealthsimple Plus that maybe hasn't been answered yet, feel free to leave it below, and I'll do my best to get you an answer as soon as I can. As always, guys, thanks for watching. Stay safe out there.